Hey, good evening, everybody. This is Rick with Hit and Run Candlesticks. I'm very glad you are here tonight. If we could get a little mic check. Again, we checked it earlier. Hey, it must work if Raymond answered me. Thank you so much. Appreciate it. Let's see here. You see a picture of our planned Alaska trading cruise. I just want to talk about that for a second. July 9th, 2017, we're leaving from Seattle, Washington. If you're interested in taking a trading cruise, I think you'll be very happy with the turnout. Here's a list of the guest speakers. Let me pull that up for you. Right there, right here. There's 8 educational guest speakers. It is being hosted, the Alaska Trading Cruise is being hosted by Stephanie Kammerman and the Stock Whisperer Group. They are the host. Doug and I, there's Doug, there's me. We will also be speakers there along with Andre, Tom, Jeffrey, Harry, and Mark. And if anybody is interested, you can check it out on the website. Whether you're a member or not, this is for anybody. If you go on the cruise, Doug and I, Right Way Options, Hit and Run Candlesticks, you'll be receiving 3 months of membership to Hit and Run Candlesticks and Right Way Options. And there's going to be a few other things as well. It'll be well worth it. Also, let's see here. Let's go back up to the date. There we are. The date, July 9th, so I would say it's maybe a little early to plan it, but I would say July 8th. Anybody in Seattle, I would ask you to be my guest for dinner, and we'll all get together and meet one another just to say hi so we can get on that cruise the next day. All right, let's get this out of here. And let me pull up a chart. There we go. Let's get started. By the way, the recorder is running. That's one of my downfalls, is never starting the recorder. Before we do get started, I'm going to start a poll. And I would like everybody to take the poll. I am sharing the results. The question is, next week, do you think the SPY will hit 207 or, I'm sorry, do you think the SPY will hit 207.60 or 200.75 first? There's the poll. So click on the little green, I guess, the green circle, if you believe it's going to hit 207.60 first. By the way, that's this top line right here. Or do you think it's going to hit 207.75, which is this bottom blue line right there? Or do you have absolutely no earthly clue? And it's okay if you don't have a clue. That's a very fair, honest answer. Please don't be bashful. All right, glad to see everybody there voting. Right now, it looks like the sellers are winning, or 200.75. 200.75. Looks like that's winning. The no clue and the bulls are running neck and neck. Very close. We'll let it go for another minute. I want to thank everybody for taking the time to take this poll. I do appreciate it. All righty. Let's stop the poll. Let's see here. Let's stop the poll. I don't want to close it. We'll just stop it. There we go. Okay, so it looks like 24% or 16 people believe the market is going to reach 207.58. This upper line is right up here before we head down here. So what those folks are looking for, let's do this. Let's make that green since we're bullish. What those folks are looking for is a bounce off this. This line right here is the 23.6% retracement with a little doji today, and it is pretty clear that there is some support there. There's no question about that. None whatsoever. And then what you're banking on is that we're going to cut through that trend line, and then we are going to move up and tag, just simply tag, that's it, first one there, tag that 207.58. It looks like 49% of the room, or 32, seem to think that this 276 is going to get tagged. And by the way, the dotted line just underneath it is a 38.2 retracement. All I did was I wanted to find an equal distance. That's why I didn't go all the way down here. And this high I thought was pretty important right there. So I just used that equal distance. That's why I did that. So the sellers are thinking, let's clean some of that up. Sellers seem to be thinking that we're going to head down this direction first before we head up. So the sellers seem to think that, whoops, that's not what I wanted. There we go. That this downtrend will continue. Let's just extend that down if I can do that. That this downtrend will continue into this 200.76 area. And I want to say thank you, everybody, for taking the poll. For those that have no clue, thank you very much for your honesty. I do appreciate it. So I think for those that have no clue, probably are trend watchers, traders that are going to follow that trend, follow price, pay attention to resistance, things like that. And that is I think a very fair answer. So again, I thank you. I'm going to go ahead and close this out. I found out what I needed to know. Basically, the majority of the room is bearish. So I'm going to close this here. Alrighty, when everybody and their grandmother sees a Head and Shoulders, we ain't going down yet. Okay. Yeah. Let's talk about that since you mentioned that. We do have a little bit of a Head and Shoulders here. Here, for those that don't know where it is, there's a shoulder, and there's the head, and here's another shoulder. And this right now, I mean, for today, back here as well, this appears to be support. I guess the $64,000 question, is it going to hold or not? And I'll tell you, those that voted, you have no clue, neither do I. Neither do I. I really don't. I can tell you what I think, but I certainly can't, I don't know that I'm going to sign a check to it. And I think what we do as traders, I think we have to look at what's happening, what the direction is of what's happening. And same with me, Gary. It's my best guess. And you're right. You go with the tools that you have at hand. It would just take. My personal feeling is, let's just get that out of the way. I think we're probably headed down here first. I'll explain why, and I can be absolutely wrong. Anybody can be wrong. All it takes is one piece of positive news, one piece of something that could fire this market up and get it to break out and tag that area right there. And even if it tags it, who's to say it's not going to do that? It could. Absolutely it could. Just because it breaks out does not mean that to the moon, Alice. If that was the case, if that was the logic, then what would happen is this breakout right here should have sent us up. So bottom line, I think following the chart, pay attention to what direction it's currently moving, and realizing that is no guarantee that we go south. That is no guarantee that we go south. But what it does guarantee is that it requires a reversal and a breakout of that trend line. Now that is guaranteed. That is required. So we can move around let's see here. We can move around sideways like this, never break out of that line, and we could go down. We could move sideways, and then we could pop up. So that is the one thing that we must have to have this little pullback or correction or whatever you choose to call it. To have that turnaround, we're going to have to see that. Currently, there's nothing about today that suggests we're turning around. It's just a little doji down there. It does have a nice long wick at the bottom. I'm calling it a doji because we have a bit of a wick at the top. If you pulled that wick away, you'd have a very nice looking hammer. That does not guarantee that that's going to be a bottom. So anyway, that's a little bit of what I think on the market. I do appreciate there was a purpose for wanting to know what everybody was looking at the market, because that's how I would like to shift tonight's presentation. We're going to look at some long trades. We're going to look at some short trades, but because the majority of the market is short, we're going to start off with short, and then we'll just kind of work some longs in there just for the long folks. Alrighty. Hello, Jeff. Hello, Rick. Jeff Gilbert. Hey, how you doing, Jeff? Would love to catch up with you. Absolutely. Let's plan a day. I'm busy tomorrow. I can't, but next week we'll definitely go to lunch. Absolutely. Okay, so let's do this. I put together a little watch list to start with. There's 15 positions on it that I went through and kind of liked them for whatever reasons. And where's my short charts? I thought I had some shorts on there. Oh yeah, there's some shorts there. Okay. So we'll take a look at some of those. Alrighty. Let's go back over here to this chart. Here's another thing about tonight. Please do not be afraid to ask questions. Don't be quiet. Don't be afraid to get out there. And let's talk about the chart, okay? Some of the goals tonight that I want to accomplish is show you an easy method to find the trades. I'm going to show you how I came up with the shorts and how I came up with the longs. It's basically two scans. They're both my favorite scan. One favorite for the long, one favorite for the short. Those that have been in the room at all, you know which two I'm talking about. I want to talk a little bit about how I select some of the things I look at to make the selection. Because let's face it, you know, if you did well, I have this already. Say you did a watch list. There's 98 on this watch list. I don't know if you can see that number right there. There's 98. How do you figure out which ones you want, or which ones to put on a smaller list? Because you can't watch a watch list with 98 on there. You know, you have to drill it down to something that's a little more watchable. And we can, Mike, a little bit later on. Please ask me again, okay? But please do that a little bit later on. So, you know, we want to drill that down. And here I've drilled, let's see, what is this? I've drilled longs and shorts down to 15. It's very possible this will be the trade ideas for the members tomorrow. I will make that final decision in the morning before the market opens up, but it's very possible this is the trade list for members tomorrow. I have no clue what the featured trade idea is going to be yet. I usually do not do that one until the morning, so I can see a little bit what the market may be up to. So how do you pick a small handful out of that 98? I'm going to talk a little bit about a trade plan. I'm not going to beat that up because that seems to be the most boring thing in the world for everybody. But the truth is, that's probably the one thing you need. If you're a struggling trader, the plan is what you need. You know, you don't, as a trader, you don't need to know how I found this, because I can show you in 5 minutes and you'll be able to find them all day long. As a trader, all honesty, you don't need to know what that blue dotted line is. Look, and we'll get this out of the way right away, okay? when I do webinars and I do them for the public, here's some top questions. What are my moving averages? I'm gonna either upset some people right here, or you're going to see that I'm one honest character. So here we go. If you've been trading for a couple of years and you're asking me what that blue line is, you're asking the wrong questions. If you're asking me what that line is there, you're asking the wrong question. If we're looking at this chart, in all honesty, if you were to say, where would you put your stop? You're asking me the wrong questions. Because you're probably asking everybody, every webinar you go to, every single one, you're probably asking the very same question. And you know what? The answers don't really change. After a while, you've got to realize those are not the right questions to be asking. So, with that said, again, I hope I didn't run anybody off. I'm not trying to be mean and ugly. I'm trying to be very, very honest. Some of you are working with your very last penny. Some of you are working with your life savings. Some of you may even have borrowed money that your spouse doesn't know about. We won't even talk about that one. Some of you have more money than you can't stand, and you're just looking a way to spend it. The important thing here is it's your money. It did not come easy to you. You worked for it. You worked hard for it. So if you're going to take up trading, if you're going to be a trader, then you really have to treat trading like a business. You truly do. You can't go out there and just sling from your hip and start firing away your six gun. You can't do that. You have to have a plan. And a plan, you know what I've found is when you sit down and write a plan, you have all the best intentions in the world until you put pen to paper. And then all of a sudden you start thinking of all these things you have to write down. And it's truly, truly, truly overwhelming. All those things. Do you know that you probably only need to write down that much? Don't worry about all this stuff around here. That's all fluff. That's all baloney around here. Your plan needs to just be small. It doesn't need to be big. It really doesn't need to be big. Now, if you've been trading a long time, and if you're successful, you probably have a plan that's bigger. This big, this big. You might have a plan that big. You might have a plan this big. Because you've had time to build your plans. You've had time to load your toolbox up a little bit. So let's get going with this. Let's get this over with. The black line is the T line. That's the 8 exponential moving average. The dotted green line is the 20 simple moving average. The dotted orange line is the 34 exponential moving average. The blue dotted line is the 50 simple moving average, and this very hard to see is the 100 simple moving average. I use this for one particular chart pattern and only one, and that's the rounded bottom breakout. I owe that to Mr. 1973 Hog, Steve Risner. He's one of the members in our room, and he brought this to our attention some time ago, and I was so impressed with it, I put it up there and kept it there because it works very well for my number one favorite chart pattern. The next thing, which it's kind of hard to see, this chart just doesn't have much of a 200-day simple moving average, but that's the 200-day simple moving average, the dotted red line there. Okay, so now you know what the moving averages are. There's no trick to them. It's simply the 50, the 20, the 34, the T line, and the 100 and the 200 up here. No magic to it whatsoever. Alrighty, now let's take a look at some charts. Let's see, I said we'd start with the shorts first, so let's take a look at some shorts. And because the majority of the room is voted to the short side, so let's take a look at some of those shorts. Now, one of the biggest things that I want to accomplish tonight is how you work through a big long list. You know, if you have a scan, if you have a scan and you scan for a particular chart pattern, then you know you could have 50, you could have 100, you could have 500, you could have 800. I guess you could have 10 maybe if it's real tight. But more times than not, there's more charts there than you know what to do with. So what I would like to do is point out a couple of things on a way that I filter down to what I think is the best charts. Now, just because I think it's the best, it's just the best for me. That may not be the best for William or Chris there, or Gary or Mike. It might not be the best for you guys. What's the best for me is the best for me. What the best for William is the best for William. That's something very, very, very important to remember. If you belong to another trading room or my trading room, or maybe you receive emails with stock picks or some sort of recommendations, if you take that sort of thing, you have to remember that these are charts picked by people, and they're picked because they like them. They're not picked because you like them. And just because they like them and they make money, it doesn't mean that you're going to like them, and it certainly does not mean you're going to make money. I say to the members of Hit Run Candlesticks all the time, you must create your own mousetrap. Now, you can certainly borrow somebody's mousetrap, but you have to tear that mousetrap apart, and you have to put it back together. Tear it apart and put it back together. Tear it apart again, put it back together. Because once you know how that mousetrap works, you'll catch mice much easier. You can't just go on somebody's word. HA is a short. I think it's a short. Now, I thought it was a short back up here, and it was put in the trading room as a short back up here. It was put as a short because it's a particular chart pattern. One way to filter through all the stocks out there is focus on one singular chart pattern. Don't try to focus on all of them. There are thousands of chart patterns. There's thousands of ideas how traders might find something, find a tradable chart. What you need to do as a trader is focus on one. Now, somebody's probably typing because, believe me, I don't want you to be quiet. I want you to be active. I'm here for a while. I've already killed almost 30 minutes and haven't gotten anywhere. Is when you boy, sorry, I lost my train of thought here. I said pick one chart pattern. The question might be, well, which one do I choose? That's simple. That has the most easiest, the most logical answer. It's absolutely, and that's why nobody gets it, is because it's so easy. The answer is so simple. Here it is. When you can explain it verbally, make noise out of your mouth. Don't think it in your head. When you can explain that chart pattern, when you can look at that chart pattern and you can see where targets are and stops are, it's easy to do when you're comfortable with one chart pattern. So when you can verbally explain it to your dog, to your cat, mom, dad, sister, brother, wife, husband, what doesn't matter. Explain it. That is the chart pattern you should be trading. It may not be the chart pattern you want to trade, but if it's the one you understand, that's the one you need to be trading. Okay, so there was one little tip right there. Just look at one chart pattern. This happens to be a blue ice failure. It also happens to be a bearish H pattern, and the blue ice failure and the bearish H pattern kind of work together many times. Many times. There's the H pattern. The blue ice failure is simply the failure of the 50-day moving average after it has been up. So up, down, fail. Now let's wait a minute here. Hold on. What's wrong with this picture? It never even reached the 50-day simple moving average. Does it have to? No, it does not have to. It's failing the 50. Okay, so we've got the blue ice failure. We've got an H pattern right here. Very simple chart pattern. All righty. Another thing, your target. This is something that's so very important, And um, here's something that traders fall into this trap. And this trap might be something like this. Um, traders might not understand or realize is the better word, realize that not all stocks, not all charts, let's see, how can I say this? You see that bearish candle right there? Not all traders realize what percent that move is, or what percent the move is from here to here, or for that matter, here. You don't realize what percent is. So you just go into a chart, you like the chart, you buy the chart. Well, what if I told you that the target for this chart was right here, and it represented 3%? Hey, that's great. Some traders would just get all tickled over that. But you look at another chart, and oh, by the way, that 3% to there, that distance, it's also 3% to there, which this chart is not, but I'm just using 3% example. Okay, so now you get into another chart. The second chart you look at, maybe it has a 10% from here to here, or to here, from here to here. Well, guess what? It also is 10% from here to here. So here's what happens. You're out there trading along, and you're trading some of those and some of those and some of those and some of those. When they start moving up and going against you, remember we're talking short now. When they're moving up and going against you, if you have too many of these and all your winners are these, look, I'm not that educated. I'm really not. And I certainly could never teach a math class. But it doesn't take much to realize that, wait a minute, if I have more losses here than gains that I have here, that's not going to work out so well. 10% versus 3%, we've got a gap. Yes, it is being recorded. We have a problem. So it's very important to know what you're looking for. Now, some traders absolutely do not want to trade anything that volatile. Nothing wrong with that. Put that in your plan. There's a great thing. That's a second idea for your plan. Trade one chart pattern until you're very, very good at it. Decide how volatile you want to trade. You know, I love it. Traders, we have this thing, hey, we love volatility. Yeah, you love it until that stock starts moving up, and maybe from here to here is 25%. Yeah, you love it until you realize that your checkbook just got small. Of course, you love it if you shorted that 25% and went down here. See, that's it. If you don't understand that difference right there, it might make a lot on where you put your stop and how you trade your chart. And do you know that if you put that in a plan on paper somewhere, you would know that ahead of time. Okay, so let's see. I've messed this all up. So let's see. The first thing is let's trade with one chart pattern at a time until you're good at it, and then move on to the next one. By the way, that could take a year. Okay? If anybody thinks that's going to take 2 days, you're wrong. You're in the wrong business. If you think it's going to take a month, nope, that's not going to work. If you think it's going to take 3 months, you might be getting close. Again, I'm very honest, very straightforward when I teach trading. So it takes a while. You can't do it in a couple of days. You can't do it at one webinar. The second thing was, let's make sure that we're looking at the volatility correctly. In other words, just remember that as you trade trades, there's different volatility. 1 inch on the chart can be 5%, can be 30%, can be 50%. 1 inch from here to here, from here to here, can be different. Once you know that little thing, believe me, that was a huge aha moment for me. The second huge aha moment for me was when I really understood it. That was the second on this one. Okay, so what we want to look at is when I'm looking and filtering through charts, I'm looking for a particular chart pattern. I want to make sure that there's plenty room to make money. Look, folks, at one point in our lives, we probably all worked for minimum wage. Hey, that's normal. You know, you get out of high school, maybe you have a paper route. You know, there's adults this day and age that work for minimum wage. I understand that. It's the way it is. I mean, you can't get around it. We did a poll here some time ago, and the average age of our membership was over 50, and the majority was retired. Now, there's some under 50, of course, and there's some under 50 that's not retired, and there's some over 50 that's not retired as well. But the majority is over 50 and retired. Well, once you get to that level in your life, you've worked all your life, you've done everything right, put your kids through college, you've held a job, you're retired. You know, you don't want to work for minimum wage. Look, I'm sorry that some people have to, but we don't have to. So if I look at this chart and I see that if we start breaking through this area down here, and I see that as my first target, first resistance area, and if this is only 2%, why would I want to work that hard? Why would I want to only work for 2%? Here's another thing, too. Let's see, that was 3. You know, I should write these down. Some of this stuff, a lot of this stuff I don't have notes. I have a very skimpy piece of note paper here, and it's always different every time I do the webinar like this. But I have a few highlights that I try to hit. Here's something that most traders do not realize. If I was to tell you tomorrow that this is a short on weakness, or you can short it inside what we call the buy box right here. I should probably do this in real life. This is what I would actually do right there. That's pretty much the short box. You want to short it here, and there's your first target down there, which we're always going to the direction of the deuce, the 200 simple right here. That's my ultimate goal. But that's our first target. And if it was only 2% down here, here's the problem. Here's the problem. Do you know that I would say 99% of the traders, if you bought it here, and if somebody told you that was the target, that it just, what if I told you that it might not make it down there? You might say, well, what good of a stock picker are you? Look, stocks can change and move in a heartbeat. You know, what do we have here? Hawaiian Holdings. You know, if oil was to drop, it would move up. There's so many things out there in the world that can change a chart. Don't throw tomatoes at anyone that says, hey, here's a chart that looks short to me and that looks like a good target area. Don't throw tomatoes on them if it doesn't work. I mean, don't blame them. Trade the chart. But think about this. If that was 6%, I think I saw it was like 6.5%, something like that. If that was 6.5%, be happy with 3%. Be happy. Most traders, they look at that and they think 6%. So what do? They wait for their 6%. And then you know what happens? It doesn't get there. They don't sell it. and then it starts moving up, and now they're back to even. They just wasted a week of their life, an absolute a week of their life. What if you sold it for 6% or 3%? What if I told you 3% could meet your goal? I'll show you that before the night's up, by the way. So, what if I told you this was a short? We always use the center of the buy box. I always use the center of the buy box. That never changes for me. Always, you got to measure from somewhere. So I stay constant all the time on this. My target is toward the 200-day simple moving average. That's sitting there at let's call it, it's over 14.5, so let's call it 15%. Round it up. 15%. All I need to make is 7.5. 7.5, Rick. There we go. 7.5. That's all you have to make. Now, I love it, the traders that get out there and say, I don't trade for less than 20%. The person that does that, I'll give you $20 right now if you show me where you made 20% on 5 trades in the last 60 days. You know what? There will be somebody take me up on that. I will put $20 in the mail to you. And there are people that do that. But if you had 100 people out there, 100 traders, what? 2%? 2% maybe have had 20% trades in the last 60 days? Think what you could make with 7%. Think what you could make with 15%. I mean, we can do that. So you don't have to have 20%ers. What I'm trying to say is don't be stuck on always getting to that target. Think about what 7% would do to you if you did it on a regular basis. So what did we do? We looked at picking one chart pattern. We looked at making sure that that there's enough money to be made for our trade. We looked at making sure that we're understanding that the distance from here to here is X%, and the distance from here to where you would cover it is X%. We always want to work with at least 3 to 1. Whoops. We always want to work with 3 to 1 risk reward. Always, at least, nothing less. Always this right here. Okay, so, and this is a short that I think may be good for tomorrow. I mean, we can put this on our watch list. So, short any weakness coming out of this buy box here, or you can short it up into here and then watch it fall. Be prepared for this level right in here just because there's some support. You want to watch that candlestick pattern in there. Let's see what pattern are you using the most. This is the opposite of my rounded bottom breakout. This is the rounded top breakdown. That's all it is. Yeah. And then for the bull, we'll look at a bull chart here in a bit, and it'll be the rounded bottom breakout is what it'll be. At least 3 to 1 risk. Yeah, 3 to 1 risk ratio. Absolutely. Handle and cup. You mean cup and handle that you are using? No, there is no cup and handle here. No. Okay. So let's do something like this over here. You know, I told you let's plan the chart. Let's plan the trade. So let's plan the trade. Well, I'm going to have to move this. I should have wrote this stuff down. Yeah, I should have wrote this stuff down. Let's do it this way in lieu of time. Okay. Here's a trade here that I'm in. Suns. Here's a trade that I'm in. I paid $8.52 for it. I bought 300 shares. By the way, this is an account. Let's see. We better look at this. This is an account that I created just for this right here and just for our featured trade ideas. It actually started at 65,000. It's up. I've not traded much through here the last, say, week, to be honest with you. And there are 2 trades. I need to find out what they were that I have not put on there. That's my bad. I apologize. And they were losing trades. So I need to add those to this right here. But I'm looking at trading 15 trades a month. My average is 6.16%. It doesn't sound like much, but you know what? I'm going to grow this account to $92,000 in 12 months, and I'm well on track to do that. I've already raised this number up because I was beating my goal by too much when I started with the 65,000, so I raised it up just a little bit. My average gain only has to be $89, well, $90, we'll call it. That's amazing, isn't it? I'll bet you didn't realize that. I didn't realize that. All right, so what I've got here is here's Suns. I have an entry at $8.52. How did I arrive at 300 shares? Because when I set my goal up, I told it what I wanted to risk. It does it for me. It tells me I can buy 305 shares. I like round numbers, so I just rounded down to 300. If it would have said 290, I would have rounded up to 300. I put my stop loss at $8.26. And if you look right here, all I've got to do is make 3.52%. That's all I've got to make my goal. That's it. 3.88 to 1 to risk to 1. 3.88 to 1 risk to reward ratio. My reward $300 or 11.85%. Let me go look at Suns real quick. Suns is having a little pullback. It's still, it's for the most part, it's still a bullish chart. It hasn't hit my stop yet. It may hit my stop. I may be stopped out. I don't know. We'll see. We'll find out tomorrow or the next day. But right now, I'm still in the trade. Okay, let's come over here, and I do apologize. This is taking a bit longer than I expected. Sometimes I get carried away, and I do apologize. Here's WYNN, W-Y-N-N. Now, this is a trade that I'm currently short in. This is a trade that was a featured trade idea on May 19th, and it was actually a featured trade idea, I think, on the 16th as well. And so as I look at this chart, let's make this a little bigger. Look at this chart. How's that right there? So here we have a chart that's up. Notice the 50-day simple moving average right there, trending up, and then the chart breaks down. And then you see how it's having trouble. That's a blue ice failure. That's a blue ice failure. If you wanted to really squint your eyes, I guess we could really do some squinting here. We could make that a bearish H pattern, but let's just forget I said that. It's a blue ice failure, okay? Let's just stay with that. This is the sell box. So sell here, target here. We're going to just pick the middle because we want to stay constant. We're looking for an average number. We're not looking for exacts. Down here, there we are. That's 17%. Now, right here's the 100 simple. I'm going to draw a line right there. And look how it matches up with that low right there. So there's an excellent chance that it doesn't make it right here. It may just get into this $80.20 area. Well, remember what I told you that I think in that Suns trade all I need is 3.5% to make money? There's a 13% trade. And man, I would be happy with that. I think most everybody here would be. Now, if it carried on through, yeah, you're looking at one second, please. Excuse me, I had to clear my throat. Let's see, middle of the buy box. Let me make sure I do this right. Oh, 13%, okay. 17% down here to the 200. And who's to say it's going to stop at the 200? I don't know that it is. Steve, do you know? Bama, do you know? Anybody that says yes, it's going to stop there, you're just guessing. Your guess is as good as mine. You don't have any idea what this market is going to do down here. Somebody in the trading room asked today, what was my outlook for the next 3 months? Are you kidding? Really? I can't tell you what the market's going to do 2 weeks from now, much less 3 months from now. Neither can anyone else. Look, it was a fair question. It really was. But the answer is, who knows? You don't know. I don't know. Chris doesn't know. No one knows. And thanks, Chris. and trying to predict that, hey, this is going to in fact go there or in fact stop there. That's where you always hear that 90, I don't know, pick a number. It's a high 90%. That's what I've always heard anyway. So say 95% of all traders wash out. This might be one of the number one reasons right here, is they try to do too much predicting. Just trade the chart. We've got a bearish chart here. We have a shoulder, a head, a shoulder. Blue ice failure setting up. We have a chart that's rolling over. We have a very logical target right there on that support line, 100 simple. Right here on the deuce, another little low. Those are logical areas, very logical, that pay somewhere in the neighborhood of 13 to 17%. Now, I don't want you to do it right now. What I want you to do later is I want you to write down how much money you put into a trade, and then I want you to figure out what 13% would do for you. I want you to figure out what 17% would do for you, and I want you to figure out what, say 7% would do for you. Oh, yeah, we better do that. Look at that right there. We're right there. So what if you would have shorted it in here? Like I said, this was a short on the 16th. I believe that's when it was. Today's the 19th. Yeah. So right here, what would 5.7% do for you? Anyway, just write those numbers down. What would it do for you? Okay, so over a period of time, by the way. So here's a nice short that I think still looks short for tomorrow, or for. I wish I didn't say that. If I could erase the words for tomorrow, I wish I could. I can't. You've heard it. I can't make you unhear it. Look, folks. If you see, if somebody says it's a short chart and you believe them, okay, and it maybe gets a little bit short in the morning, but then it pops up by the end of the day, maybe to here. Again, don't throw tomatoes at them. Did that change the short? Let me look. You guys, I didn't mean to set you up. I just thought of this. We took a vote early on. The majority of the room was short, so I have to ask you, does this doji down here make us bullish? What if tomorrow we have a bounce up, which I think there's a high probability of a bounce. Whether it be sometime tomorrow or Monday might be questionable, but I think there's a high likelihood that there's going to be a bounce. So we get a little bounce. Does that make it bullish? How's this? Let's try this one. Does that make it bullish? The answer would be no. Great big N-O. No. But wait, that's a bullish engulf. It's not bullish till you see follow through. Then it is. Then we have bullish game on. But not till you see follow through and not till that trend is broken to the upside. So is this a short? I think this is a short. I think it's a short all the way up here, tell you the truth. Anything under 207, I've been stuck on 207. Anything under 207, I think is a short. Over 207, I think we have game on to test these highs. Under 207, sorry, no way. Okay, so let's look at a long here. And these are all longs that look good for tomorrow too. Um, Somebody might say, if you think the market is going down, why would you trade a long? Do you know that any short market you can find a long? In any long market you can find a short. If you're in a shorting market and there's not a long chart to be had, ladies and gentlemen, we have bigger problems than we realize. If there were no longs out there to be had, this is what the market would look like. So there's always a long trade out there, always. It may not be as good or pay as much as some of the shorts, but there's always a long trade. So say we start to see a little bounce tomorrow. This might be a trade you're looking at. So how would we set this up? How would we trade this? Well, the first thing is let's go, you know what, I want to make sure, let's do a rounded bottom breakout. Here you go. Let's do a rounded bottom breakout. And let me make sure that's the one I want to use. Oh, man. Oh, no. Let's use, what's this right here? Consumer defense, packaged foods. Well, the problem is I saw Tyson looks a little bearish. So, you know what? I'm going to pass on that because Tyson's not looking that great. Here we go. Now, to be in all fairness, I'm already long this. I've been long this for a little bit. But here, how would we trade this tomorrow? And we're going to set this up as a plan as well. So let's take a look at this. Here's WB. This is the rounded bottom breakout. One chart pattern for long, one chart pattern for shorts. Here's the one I would go to. Make sure you have enough money. Can you make enough money? You see this right here? This is where I would consider a resistance to be. We have a little topping. We have a little bottoming. We have a little consolidation, more consolidation. Man, that's a pretty. I think you would agree with me. I think that line shows that price struggled. The bulls struggled and the bears struggled. There was a fight in the streets. They brawled. And it turns out that the bear was bigger. Well, here we come back up. This makes for a very likely place for another brawl to happen because that's where the brawl happened before. Fights happen at the same place all the time. So if you have a fight coming down, you're going to have a fight coming up. When you get to that level, when you start to cross that street, there's going to be trouble. Okay? So let's look at this trade. And let's do this trade like this. Let's make this trade, we're going to buy it on a breakout. So a breakout of 22. So we'll just say 22.47. Right up to here. Is that pretty close? Let's just say 14%. 14%. I would suspect most people would like 14%. So what did I say to buy it at? I think it was 237. So we're gonna set a trigger 237. So we're gonna put let's see, WMB. We're going to, before I forget this, I'm going to put the price in there. Otherwise, I'm going to forget it. 2.37. So I'm going to put the price in here. Market bias. Hey, the market's heading down, so my T-line chart is down. The candlestick, if I remember right, it was a bullish engulf. That would, I think, be close enough. I'll look at it again to confirm that. The chart pattern, it's a rounded bottom. Let me peek at that one more time. I'm going to say a rounded bottom breakout with a flag. So RBB flag breakout. There we go there. All right, 237. We're going to set my stop. I better set a stop in there. So I better look and see what that is. I'm going to go down to right here for a stop, about $20.11. I'll go $20.09. Well, what's that low? 2011. I'm going to go 2009. Excuse me. Let me just move this one up. 2009. That's pretty close. We're sitting right here. I think that's a good place to be sitting. Just under this low. I think that's a fair place for a stop. So I'm going to come over here and what did I say? Something's wrong. Something is very wrong. 22.22. I don't know where I got $2 at. All right. 2009 stop loss. Okay, so I'm going to put that stop loss in there. And see here it says I can buy 117 shares. 117 shares. I'm going to round that up to 120. It doesn't seem like very much, but that's really all I need. I'm trading 4.1% of my account value. Notice it's yellow in case this is color coded so that if I, if I come over here, if I traded, I don't know, let's get ridiculous. Let's say 600. Look how that turned red. It's warning me. So let's see, I could put it, let's say at 100. Still, it's under, so let's go ridiculously 50. There we go. See how it's green? So you're well under the shares allotted for the size of the account. I'm going to go back to my 120 because that's what I want to do. So I'm going to put it at 120. I've got my stop loss in place. I've got everything there. Let's see. I'm going to go down and put. Let's say it actually triggers. So what I'm going to do is, where's my button? Oh, down here. I'm going to copy to actual. So we're going to put. I have to put today's date because it won't let me put tomorrow's date. Not until tomorrow. So here I'm looking to meet my goal. I just need to do 3.38%. That's all I need to meet my goal. That's to increase my account from that 70, what was it, 2,000 to 90,000 in 12 months. It's not asking for a lot. That's not much right there. All righty. So this just needs to go to $22.97. So I'm going to put this up here. I've just created a plan, by the way, just like that. 97, close enough. That's all I have to do to meet my goal. This is a cherry on top. So here's a nice trade that I think may be set up for tomorrow. Just watch the energy sector because the energy might be looking for a pullback right now. OIH has a bearish H pattern, and that is a blue ice failure. USO, we tagged the deuce up here. We pulled back the T line. It may try to pop up. We could get a little. That WMB could take off tomorrow. We'll see. But that's why we put the trigger above, so that if the market's moving up, then we can catch that bullish trade. All righty. There was a question up here. Let me come over here. Let's see, what is a blue ice failure? A blue ice failure is a chart pattern where the chart has been up and it pulls back after it's been up above the 50-day simple moving average. Note the blue. Pulls back and it can't get back up over the 50. It's what we call blue ice failure. Let's see. I don't mean to miss anybody. Sell in May and go away. Chris, that's a clever little saying, but you're here, so I guess you're not going away. It's a clever little saying, but nobody does it. But everybody says it. Nobody goes away. Does anybody here seriously know somebody that come May, they actually don't trade at all till the fall? Does anyone seriously know somebody? I don't. And I know a lot of traders. I don't know anybody that does that. It's just one of those clever little sayings. Outlook for the next three months. I don't know. Let's see. I did the blue ice failure. What about the pivot at February 1? Are we talking when? When? February 1. February. I don't know. Maybe we're not talking when. In which case, I really don't see where you're talking about. Unless is that February 1? Yeah, I really don't know. Daryl, if you could help me out with that, I'll be a little more detailed what we're looking at. Let's see. Is this hit and run own charting platform? If you mean this right here, this is Trader Vision 2020. It's a product of Hit and Run Candlesticks. Yes. We have a big webinar. Everyone here will get an invitation to a big webinar coming up, a couple of them in a few days. I promise you'll get an invitation for that webinar to learn more about it. Goldman, wait a minute here. Thank you, Maria. Let's see. Are there any ETFs you're looking? Yes, there is. I'm actually long TZA right now. I've been long TZA for a couple of days. An inverse ETF, like that one right there. I know a lot of people that are long QID right now. A lot of people long QID. Off the top of my head, I don't know. It's been a long day. Just about all the inverses are looking a little bit to the long side right now. Let's see, Daryl, WMB resistance pivot May 1. Is that what you're looking at? Pivot May 1 February 1. Sorry, February 1. February. That's 2. That must be that right there. No? 2. Bring it down. You know what? I'd like to talk to you sometime on why that's a pivot, why February 1 is some pivot. Yeah, I'd like to know later on. Right? We don't have time tonight, but I would sure like to hear from you on what makes February 1 some magical area. I'd like to know. Let's see. Do you pay attention to the warnings of a crash by the likes of... Well, Lou, here's the thing. I mean, I listen to all those guys, and I'm the first one to tell you that we have some serious problems, but we're not going to go there. We'll get kicked out of the room for talking about that stuff. We've got some serious problems, though, no question about it. Is the market going to crash? It could. Could it jump up 1,000 points? It could do that too. But if you're in this trading room right now, you're a swing trader. If you're not a swing trader, you're in the wrong place today. Tonight, you're in the wrong place. We're all about swing trading, and when we swing trade from 2, and how many days? I know people that swing trade 2 to 5 days. I know people they try to trade 2 to 10 days, 2 to 15, 2 to 30 days maybe? All that would qualify for swing trading. All of that. I don't think putting a date on it is healthy for a trader because you're trading the chart, not the date. Trading the chart, not the date. And by the way, Ted, we're always looking at daily charts. Always looking at daily charts. So, are we going to crash? We could. But you know what? I'm going to bet you my life savings that anarchy is not going to start in 5 days. I will bet you my life savings that zombies won't show up in 30 days. If I'm wrong, who cares? The stock market won't mean anything to us. If the market crashed like some of those people say, you better have water, whiskey, and guns. That's what you better have. So, do I follow these guys? I laugh at them more than anything. They're idiots. I'm sorry, but they're idiots. Is the market going to crash? It could. But like I say, I'm willing to bet you my entire life, everything I own, that in the next 5 days or the next 10 days or the next 15 days, zombies are not going to show up in the stock market. No one's going to come eat my eyeballs out. I'm not going to have to go buy more ammo. Pretty confident of that. So I laugh at those guys more than anything. So how's that for a statement? There we go. Okay, so let's take another short. Or what's this? I'll tell you what. This is a nice long right here. I'm not Tony. You could be, but I'm not. LPSN is set up. Let's take a look at this. Do we have enough room up to that 200 period moving average, which comes very close to these lows over here? So I'm actually going to pull this up to these lows right here. I'm going to pull these up to these lows. Somebody asked me about Apple. Please type that in there so I don't forget, and we'll take a look at Apple right after this one, okay? So let's look. Do we have enough money to trade or to make money? 12%. That works for me. Thank you, Ramesh. 12%. That works for me. You know, I don't know how much anyone here trades with, and I don't care to know. It's none of my business. But you know, if you put $1,000 in the market or in this chart, what would 12% do for you? I mean, you just have to ask yourself, if you put 10K, what would 12% do for you? Now, a good question would be, and I'm going to throw this out there because this might need to be asked, and I'll just ask it and then I'll answer it. A good question might be, well, not every trade is a winning trade. You are absolutely right. You are so right. So what would 12K do for you? You've got to figure losses in there. No problem. We could argue all day long on how much that should be. That is an absolute opinion, and the best thing you could do is look at your past history. But for the sake of the conversation here and the sake of trying to be as fair as possible, and I mean, everybody's out there a little bit different. Everybody's account size is different. Everybody's win-loss ratio is different. They're just not the same. So let's just agree to, what if you cut it in half then? What if you had 12%, but you had losses that only gave you 6%? So in a 12-month time, 12-month time period, what would these kind of gains do for you? The importance of this is creating that plan. The importance of that is putting it down on a 3M stick-it note, on a legal pad, writing it on the palm of your hand, using a tool like this. This tool, another tool, any tool. If you don't make the plan, then you're not fulfilling the entire trading program. You can't just go out there with 6 guns and start popping away. Okay, let's go take a look at Apple. I did promise we would look at that. Apple. Whoa, there we go, Apple. All right, now Apple is what I call a pinball setup. It's a type of chart pattern, and I'll real quickly. I can't go into great detail because we just don't have time. But real quickly, the target is always the 34 EMA. Now, when I look at Apple, it's just a chart. I don't care that it's AAPL. I really don't. I don't. It doesn't matter to me that they make the iPhone. I love the iPhone. They're no one special to me. Everybody that works there, they all put their pants on one leg at a time. They all have credit card bills. Hey, it is what it is. It's just a chart. Okay, so I'm not going to get into the whole, Apple's going to 800 kind of a thing. I'm not going to go there. It's just a chart. So let's just trade it like a chart. Right now, I would look at Apple at a possible 4.5% trade. That's it. That's all I would look at right now. Now, really quickly, let me kind of explain this as much as I can in the time we have. Let me grab a few things here. We're swing traders. Our job is to make money when price swings up. Our job is not to pick a bottom nor to pick a high. That is not our job. If you want to invest in Apple, just buy it and shut your eyes. Let it go. Just keep buying it. You can't argue that it's a great company or not a great company. It's a fantastic company. It makes fantastic products. And you know what? I have no doubt they're working on the next big thing. But we're not investors. We're traders. So our job is just to swing it. And we swing from where we think it's a buy to where we think it's a sell. Or maybe we just meet our goal. And William, could you comment on Apple filling or not filling the gap? I sure will, I sure will, William. In fact, you almost read my mind, what I'm about to say. Let's think of things as swings, all right? Swing. Here's what I do not think. And do I know this like for a fact? No. I just have looked at so many charts, and it's just a chart, that this is the probability. And I'm going to assume that it's going to fill that gap. All right? I'm going to assume. And I'll show you here in a second something else. I'll tell you what this chart's not going to do, is to just do that. I doubt it will do this and fill the gap, because it is just so unlikely, so improbable that it won't consolidate right here. Now, it may consolidate and make a very nice, maybe a flag, and then it might go. I just don't think it's just going to just fly through there all the way to the gap. And it's just because of the probabilities. So let's swing it. Here's what we're going to do. That, I think, is a very good target. And you always want to go a tiny, tiny bit below. So let's box it in. And right now, that right there is one trade. This is the second trade. The first trade and the second trade can certainly go together. But as we move into this area, swing up, this is where you've got to be really sticky with your money. You've just went out there and bought a stock, and it's worked its little tail off. You've worked it, and now you're up some cash. Protect that cash. I mean, there's all kinds of ways you can protect it. Protect that cash. And if you want to keep it, as long as the chart doesn't start to fail, then hang on to it. Go right ahead. But we don't know that it's not going to fail here. We don't know that it's not going to cut right through or, consolidate a little bit. Protect that cash and then make the next trade up. So now what you have is a swing and a swing. That's what we are, swing traders. Swing it up and take your profits. That's the way I would trade Apple right now. Here's something about Apple, though, that I've got to point out, because I don't think it's just going to be as easy as that. And I'm just looking at the chart and looking at probabilities. I think there's a higher probability. Let's do this. I think there's a higher probability of getting up to this area in here and then pulling back. If Apple's going to be a true buy, then it will put in some sort of a bottom and then break out. Now, if it does this and pulls back and breaks out, you've just increased your chances to get through this and get into that gap. And that's the way I see the Apple chart. Is the SPY a rounded top? VL. Let me ask you, and I'm this way, and I'm sorry, I am just this way. We put labels on things, and I think sometimes that hurts us rather than helps us. Does it matter whether it's a rounded top? Does it matter? If I was to say it was, would it matter? If I was to say it wasn't, would it matter? And let's think about this. Let's connect the highs. Is that rounded? I would say yes. Does that mean that disaster is ahead of us? No. No. That doesn't mean there's disaster. It adds to the probabilities there might be. But sometimes I think when we put these labels on chart patterns, we don't realize, or we forget, and we forget that all it takes is one piece of good news. And by the way, I am not bullish. I'm not trying to turn you bullish at all. I am more bearish on the market than I am bullish, hands down. But all it would take is one piece of good news to turn this rounded top into mush. That's all it would take. All it would take is a breakout to test these highs, follow through to test these highs, follow through to new highs. So, sorry, I have to do this because these are things that just mean so much to me. We just have to be careful naming things. Yes, that is a rounded top. Yes, it is a head and shoulders. Yes, it has a more than a 50% chance of failure. Yeah. Let's see. Nougat. And we've got another 10 minutes, and then I'm going to call it a night here. Nugget, and here's another thing too. If everyone would do me a favor, if you're going to put charts out for the next 10 minutes and we're going to look at it, please put out long or short. I want to know what you're thinking. Okay, I think that's only fair. What you're thinking about it. Now, as far as Nugget goes, you're getting this little bounce off the 50, but I got to tell you, I think it's more important to draw some lines on this and realize that we've got a top. Actually, we'll call that just the failed high. We could really come in here and do something like this. High, low, failed high, failed or a lower low, a failed high, a higher low, a failed high, and now a lower low. This might turn up bullish. I mean, it just might. But this is not a signal that I would just jump all over, to be honest with you. There's one little part of this chart I do not like. I do not like it at all. And the bulls can overcome it, but they're going to have to overcome it. And that's this right here. Let's make this red. Let's make this an arrow. Whoops, red. Huh. Come that's not working. Red. There we go. Arrow. You see this right here? And we'll go ahead and make this green. You see that? And now you see this? Every which way from Sunday, that's a bearish chart pattern. You can't even get drunk enough to get a bullish chart pattern out of this. So if you're looking at it bullish, I'm just taking a gander on this. I would be very, very careful. Here's one little simple way that I would work it. This is the 50% line from this high to this low. I wouldn't touch this long until it crossed that line right there. If you're short, I would stay short. Whoops, I think I'm missing one up there. Rig. If you're short, I would stay short on rig. If you're looking long, I see absolutely no reason to be long. Nothing here at all. If you're short, the trend is still short. Let's see. Are you maybe some sort of support? You know, if you're seeing some sort of support, support means diddly squat unless price approves it. So, I can see where maybe you're looking at that. I don't know. Like I said, I don't know if you're looking at this long or short, but the trend is still short. The start still looks short. If you're looking at it long and the possibility of this support, price has to approve it. In other words, we need to see a bullish, some bullish price action in there. Where are we? Can you comment on why do we do it? What's the, is it PAL? I don't know what the, well, here, I can do it this way, I guess. PALO. That's not an O. There we go. There we are. I don't see anything bullish just yet at all. Right now, I still see a downtrend here, and let's do it this way. We have a downtrend. We have a bear flag. All this is another bear flag right now. That's all this is. Now, if the chart does this and then comes back up, and if we take out that high right there, now you have something. You have something long you can look at. Otherwise, I would stay with this short. There's just nothing here that looks long at the moment. At the moment. EXK. That's not right. EXK. There we go. EXK is going to, let's just borrow that. EXK is going to need to move up a little bit. I'm going to bet money you're looking at this long. I'm going to take a stab in the dark on that one. But I bet you're looking at it long. A doji is not a buy signal, despite what some people seem to think. All we've got is a gap down doji at the 50-day simple moving average. We are at a little bit of support, but the most important thing is to follow that trend. A high, a lower high, lower high, lower high. This is the most important thing there is right here. So all this right in here, the bulls can work with this, but until it breaks out, they can work all they want. They can ride that bronc, but they're not going to get their 8 seconds until they get through that line right there. So what I would do is I would look at that. Now, really quick here, let's do something. Let's do something. And who put this out there? If you don't mind, Pablo, if you wouldn't mind, how much money, not money, what kind of percent do you want to make? I'll go ahead and answer that. We'll come back if you don't mind. Let me write this down, EXK. EXK. What kind of money are you looking to make? In the meantime, I'm going to go look at X. So we're waiting to find out what Pablo would like to make on EXK. X is still trending down. I had some people in the room look at X today. X has I think it just might bounce, but I'm thinking relief rally. I don't think that's the wrong answer, much as possible. I don't think it's ready to come up, and even if it does, let's see. I don't have enough time to do my what a bottoming chart has to do, the type of chart pattern. So I'll kind of abbreviate it. The only way this can reverse is if it makes one of two chart patterns. One is it scoots along and makes a rounded bottom like that. Then it has a high probability of moving up. The other chart pattern is if it does this. If it moves up, and it doesn't have to be tomorrow, moves up, back, this back supports, and then we move up past that right there, assuming that's where it pulls back at. Right here, I think that's craziness. Risk takers like to buy things down there. I find more times than not, the folks that buy down like this, not all, but most are struggling traders. They are traders that they trade a little, they make a little, and they lose more. They have a good week, and then they have 2 bad weeks. The end result is at the month they've worked their tail off, and they've really got nothing to show for it. That's usually the trader that buys down there like that. Let it build that bottom, then trade it. If you're looking long. Right now, the trend is still down. All the 200-day moving averages in the world, all the support in the world, all the little dojis in the world just don't mean anything until it breaks out over that downward trend line. Okay, I'm just going to go to that EXK, and as much as possible, that's not an answer. That's one of those wrong answers, by the way. Thank you, but I understand trying to be funny, but all seriousness, it's one of those wrong answers because that's a lack of a plan. So let's think about this. Let's just think about this. Let's throw some maybe some fib projection lines on this, and we're just going to assume that's the low. We don't know that that's going to be the low, and let's don't trade this until it breaks out of say 392. So let's put a little line up here. Right there, close enough. I don't really care about this high because if we start back up, what we're going to have is a chart pattern. Let's see, we'll make it green. If it starts back up, this is going to be the chart pattern. Whoops, that's not what I wanted. There we go. We're going to have a nice big continuation pattern. Nice J-hook continuation pattern. That points up like that. Okay, so if we get back up here, we already know what it's pointing to. We already know what it's doing. So here, I don't care about that line. That's minor. So let's buy it at $3.94. Let's move up here to that fib projection line. That's 28%. Please write that down. That is 28%. Did I ever tell? Well, some of you know the story. Years ago, I worked with a person, and we worked privately together, and they were a struggling trader, and we worked and worked and worked and worked and worked and worked. And one day they called me up. They lived in a different city. They called me up and they said, Rick, I forget which stock it was. I'm up, I don't know. I don't know what the percent was. It was $1,800 though. I remember that number. They were up $1,800. They've never been up more than a couple $100 on any given stock. They're up $1,800. Here's what the person asked me. Do you think I should sell it? I wanted to just pound my phone on my desk. Yes, sell it. You know what she says? It might go higher. Really? You've never made more than $200 a trade in your entire life. You are up, I don't know what percent it was, $1,800, and you're about to get all greedy on me? Really? Let it break out. Take the 26%. That's the way I would trade. Remember, one of those key things when trying to pick out a trade, is it a good trade? Does it have the potential? This has monstrous potential. Monstrous potential. And 28%, take it. Please take it. Please don't say, well, what if it goes higher? Our job is not to pick bottoms nor pick tops. Our job is to take a chunk out of the middle. Trust me, wherever you buy it at, somebody will get a better buy. Wherever you sell it at, somebody will sell it higher. Just trade against yourself. Be happy with that move. That's a nice chart if it breaks out. Thank you. Okay, where are we? I think we are GSAT, bearish, and we're going to call it quits after Alberto there. GSAT, bearish. I think I would have to know your time frame. I would have to know your time frame because if a pullback to here is what you mean by bearish, I think that's possible. I think you might be right. But to be honest, I would put that on my watch list, and I am, by the way, writing that down. And I'm going to stalk this for a buy signal is what I'm going to do. Now, I'm going to come over here, and I'm going to take that candle right there, and I'm going to go up to this high, and this is the 50% line. There we go. And after that, I don't need that anymore. And I got to tell you, I am going to shop for this long somewhere in that area. I'll move it all the way down there because it might come into support. Let's look at this. Yeah. So again, if somebody says bearish, this is important to ask: is well, what time frame are you looking at? In other words, if you are looking from here down to here, yes. Yep, it's bearish. If you're looking at it from here down to here, yep, that's bearish. But as it moves down, man, I'd have my eyes peeled for a long trade on that. Boom. Maybe it's boom right here. Thank you for that chart. That's a beautiful, beautiful long chart in my opinion. Let's see, Dawn. But the top in March lasted about 3 weeks, so I expect this one will last about the same. Dawn, that's possible, but I'm not sure what happens today has a whole lot to do with what happened 3 weeks ago. I understand where you're coming from, and that's just not something I use in my charting because we can debunk that in too many charts. But you are right. I understand what you're saying. I truly do. It's just we can debunk it in other charts. So it makes it kind of that, well, it could, and there's charts that, no, that doesn't hold up. So it's kind of a, I follow the chart is my answer to that. Follow the chart. Could I review TAC? Absolutely. TAC. Oh, yeah, here we are. TAC, it's pretty simple. You need to see a buy signal. It is in a nice uptrend. This may be just a profit-taking pullback. I am and would be a little concerned with all of that right there. I should have done it this way. I am concerned with that top. So we need to see a turnaround. So let's turn it around. Let's turn it around in 2 days, okay? This is what I would have to see if it happened in 2 days. There you go. Now I would be trading. Now I would be trading over this area right here. Over the T-line and probably over the 20-day simple. If we go back, like, let's do this. Let's look at that, and then let's look at this. Let's look at this. Kind of the same. Kind of the same. Up, nice flag. Up, could be a nice flag. A little bit long for me for a flag, but we'll stretch it. Remember, let's buy it over the 20, over the T-line. So let's buy this on a breakout. So it breaks out. That's almost a 20% trade. What I'm trying to show you here is you don't have to pick the bottom. You don't have to buy it right here. Let it break out. Let it prove that it's ready. And if we look at that same little pattern, look at this little pattern right here. Isn't that same kind of thing? Look at this. Up to this high. That's 26%. So what I'm trying to prove here is you don't have to buy it at the bottom to make great money. TA. Hey, was somebody draw me a line down there, please? Pretty please. TA short, period. I mean, if you're looking at TA long, please tell me why. Other than that, we're just going to call it short. There's no buy signal there. GILD. If you're going to trade GILD, let's be honest with ourselves here. This is a time for honesty. Just so we know what we're doing, and that's what I mean here. Here's what we're doing. We're going to take a bet. We're going to bet. Whoops. Bet. We're going to lay a bet on the table. And here's what we're going to bet. We're going to bet that this double bottom produces. We're going to bet that this downtrend turns. That's what we're doing. We're betting. Let's do this. You see how we have this low, this high. We did come lower. But, what did we trade? 9 million shares? Can you imagine trying to herd 9 million cats through a door? So let's give this its double bottom. Let's give it to it. It did pull up. It did close above that low. You see that little high right there? So at the very minimum, don't trade this till it's above 83.95. 83.95. That'd be above the T line. That would be above that high, And even then, look, you're right at this support. Low, high, fail. Bulls and Bears had a battle right here. The Bulls and Bears need to decide who's going to win this battle. So, at the very least, don't bet the double bottom is going to work. Don't bet the downtrend is going to turn until it proves itself that it can create a bottom. Let's talk about tradable bottoms really quick. I do not feel that this is the tradable bottom. The tradable bottom is after it creates some sort of a move. So if we took this low, I'm going to draw it up a little bit more, down like this. This is our tradable bottom, not this. This is bottom picking. There are people that make this work. And you know the people that make this work are the folks that have more money than they know what to do with. They have deep pockets. Because all it is betting. The house always wins on bets. Always. Look at all that electricity that Vegas has to pay for. They don't pay for it because it's just there. They pay for it with our money. This is betting. So allow the bullish chart to develop and then trade after the construction. Trade after the construction. I apologize. Maybe you're looking at this short. I apologize. Maybe you're looking at this completely short. The double bottom, watch for that little snap up, and then look for the return back down, and watch and see if it doesn't come back through this level. And on a sell signal up here, that might be a good place to enter it. I apologize. Maybe you were looking at this short. Let's look at it a little longer term. Right there would be a logical area, a little longer term on the short side. So $64. That, by the way, is a weekly blue ice failure. That's beautiful. Again, I apologize. You may have been looking at that along. I am truly sorry. I should have paid more attention to the chart. Or you were looking at short, maybe. In NM, you've got to tell me what stock we're looking at. I apologize. I have no clue when you say that you don't get why it would be bearish. I don't know what chart we're looking at. What do I think of MGT? I'm sorry. Travis, I want to know what you think of AGT first. I'll be glad to answer your question. I'll stay here to midnight if you want me to. I want to know what you think of MGT first, okay? Please. ADM. ADM, if it can pull up enough energy to close above 39, I might consider that a nice long trade. But it's going to need to close over this high. That will also take out the deuce up here. And you know what? It'll take out this little bearish little group right there. So over 39 is what I would look at. I see a long with a very tight stop. Thank you, Alberto. Thanks for pointing that out. I skipped CVX, not on purpose. I apologize. CVX long, only on follow through, above, pretty much above $100. Get above the 220 up there. And, you know, you're going to find that in the trading room, we trade a lot with support and resistance and the trend. The trend is the best thing you've got going for you. So you can't deny, and this is the Dow Experience 101. I mean, the first day in class. This is it right here. This is it. A high, a lower high, lower high, lower high. What does that say? A lower low, a lower low. What does that say? That screams of something. Absolutely screams. What would it take to turn this around? It's going to take a breakout. So, is this long? Only if. Only if. To buy it right here, let's go to Vegas and play that bet. Sometimes they work, sometimes they don't. SPX short, I would say yes. I am short overall the market right now. Yes. I think we still have a date at least with the 200. The very least. Let's see. You cannot. Well, the market. Don't bet with the market. XLF. XLF. Let's see. I forgot how that closed. XLF. Ask me if it breaks out and ask me if it breaks down. While it's in here, you can certainly put a long or a short trade on, but these lines would be my stop. I think you need to have it break out or break down one way or the other. Right now, I think it's a little questionable. And that's what I think about XLF. If it breaks out, then I think we likely come up and test in the 2460 area up into here. If it breaks down, then the next likely place to the downside is going to be somewhere in the 2190 area. FAZ, and after Travis there, we're going to call it a night. FAZ, this is a breakout candidate or a breakdown candidate. You're going to have to get through a high, a double failed high. So these bulls are going to have to work to take this out. They take this out, they should be rewarded well. If it falls back down, really, the trend is still just moving down. I mean, and like I said, I'm bearish on the market. And here, I'm just the opposite on this chart. And that's because it has to do one of two things. Trying to make the call in this area is pretty much guessing. Now, somebody is going to call it, and somebody's going to get it right, and they're going to dance on that mountaintop. But somebody's going to call it, and somebody's going to get it wrong, and somebody's going to lose money. You cannot argue with the fact it stopped, and in fact, it put a heck of a bearish engulfing on good volume. So we need to see that breakout. And if it breaks out, and it holds that breakout, there should be rewards there. Very good rewards. Let's see. I skipped MANH. Didn't mean to. Apologize. MANH. That's one I'd like to know if you're looking at that long or short. I can make kind of an argument both ways. If it breaks down here, it kind of looks like it's going to settle back in and at least retest this 55, 56 area if you're looking for that breakout over the 50-day simple moving average. Out of all the charts out there, I'm not sure this is a chart I would even be trading. There needs to be something happen here. Maybe you know something about the chart. Maybe you have an attachment to the chart of some sorts. But something needs to shake this up just a little bit. Yeah. Okay, MG, is that a short or a fluke? I think if you're trading MGT, I'm going to have to ask you, are you a professional stock trader? Do you have years of trading under your belt? And if the answer is yes, if the answer even hints at a no, if you don't come back with a snap answer, I'm the best trader in the world, I would stay about as far away from this as I could possibly stay away from. These kind of charts are crazy dangerous. These are not for people with pacemakers. These kind of charts are not with people that play with that only been trading for a short period of time, or they have yet to say, I make a living trading, a good living. These stocks are crazy. I don't even like to talk about stocks like this. This thing has zip for volume, and it just one day, boom, there you go. I would stay away from it. I would absolutely stay away from it. There's my thoughts on MGT. Okay, I'm going to leave it there. Everybody have a great night. Thank you so much for being here. We'll see you tomorrow, some of you in the trading room. Some I hope to. Take care. Great night.